Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Now that election day is finally here, global investors will turn to the keyword of certainty. And of course, that's centered around the final results so markets can start to price in policy. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss it. And Phil, here it is. It's been a number of months and weeks that we've arrived, basically.
Yeah, the last few weeks seemed to take longer than the weeks before it, didn't it? But it's interesting to take a look at how markets normally behave around elections, just looking at the data rather than trying to predict who's going to be the winner. You're right. One of the things that really stands out is how uncertainty seems to increase before an election and then dissolve after the certainty of the election is known and things can get back to sort of moving forward based on the new certainty.
And if we take a look at our first couple of charts here, we can see that with volatility and volume, that's almost expected, isn't it, Phil? I mean, this is nothing new, regardless of 2020 is more contentious, but this happens through typical election cycles.
Yeah, I mean, obviously an election can be a big deal. It definitely creates winners and losers by sector and for specific stocks because the policies are different for each party. So there's a risk that the policies shift materially. So you do tend to see an increase in volatility before the election, regardless of what the underlying volatility levels are. I mean, obviously in 2008, in the middle of the credit crisis, volatility was elevated a lot more than it was for other years. And that was because of the credit crisis itself. This year is a bit similar to that. Volatility is elevated because of coronavirus. But you can see the averages over the longer term tend to see a little bump before and then a subsidence during the election and then afterwards. The one that stands out on the volatility is 2000, which was obviously the other contested election. I say other because there's an expectation in the VIX at the moment, the forward curve of the options vol, that indicates we might have a contested election again this time around. And so what you see then is the volatility actually gets elevated after the election because it's an increase in uncertainty, at least until that election uncertainty is resolved. It is interesting looking at volumes. You kind of talk about the fact that all that volatility happens before the election. Actually, the volumes aren't that elevated. So you'd think there'd be a whole lot of activity around an election, and the results aren't that compelling on that front. There's probably some evidence that the trading happens before the election to pre-position for the election. The one exception to that was 2016, which was obviously a big surprise. And so we saw a huge spike in trading, 60% above normal in the week after the election because people had to reposition for Trump's policies, having positioned for Hillary Clinton's policies.
And I think that's what's so interesting about it because we are so close in the race and there really hasn't been much conversation around policy for the most part. We just haven't had the opportunity to get there or debate the issue. So I think when we start to look at sector and stock performance and how that's going to adapt once we have a clear-cut winner, that's what I'm most curious to see how this plays out.
Yeah, so we took a look at the last election, the 2016 election, just to see how dramatic that could be. And it is interesting. So in the sort of weeks leading up to the election, there wasn't that much dispersion across sectors. The correlation seemed to increase as you got closer and closer to the election. And then obviously a surprise result. You saw a few sectors like spike up dramatically the day after the election. So you saw the energy sector eventually grow, but you saw industrials and financials spike straight away. You also saw healthcare spike straight away. So that's the kind of reaction you could get once we have certainty of whose policies are in place. We've already seen some Biden trades coming through in the ESG ETFs with a lot of activity there and some outperformance. The other thing, just talking about the directionality of the market as a whole, I think what you see when you look at what happens after the election, the sort of next 3 months, is generally positive. There's been a couple of exceptions in the last 20 years, but arguably, Bush in 2000 and Obama in 2008 inherited the presidency in the middle of a market-wide sell-off. So 2000 was obviously the tech crash and 2008 was the credit crisis. Other than that, you tend to see the markets do pretty well in the next 3 months.
I also think what's really interesting from a political point of view is just how important the swing states are this time around. And I think when you look back to 2018 and how we saw those local elections really swing more towards the Democrat side, I don't think if you would have asked this question in 2018, even 2019, or even before this COVID surge happened, that we'd see it as contested as it is right now. And I think that's where that uncertainty lies because of any, fears of being contested or any legal issues through the court.
Yeah, and obviously 2016, it looked like Hillary was well ahead as well, and that turned out to be wrong. And so there's a bunch of states that are still being talked about as states to watch, even though the pollsters have Biden ahead in most of them. So tonight's going to be interesting, and obviously tomorrow and the day after, because so many people have voted early this time around because of coronavirus, and just because that's the trend is people trying to get out and vote early. I think in terms of policy, which you talked about earlier. It'll be interesting to watch because if there's a Biden and Democrat sweep, that makes it much easier for Biden's policies to get implemented. It probably means we have higher taxes, but it also probably means we have much more stimulus more quickly coming through the system. And we know that Biden's been focused on green energy and infrastructure. I think if we have a Trump presidency, it's going to be interesting. He's obviously running on the same policies he's been running on with tariffs, trade wars, tighter immigration, maybe even tighter immigration for skilled workers has been discussed. And I think what we're going to be hoping for is we get the COVID vaccine so that we can have a real recovery in the economy. And, 3 years, 4 years from now, we will probably have a vaccine that's pretty much globally distributed and we'll have the recovery that he wants anyway. The real, I guess, sticking point for policy will be if you have a Biden presidency and a Republican Senate, which is likely. It's definitely a close to 50-50 outcome because then the Senate will probably block some of the big stimulus and the big infrastructure plans. So we're going to have smaller deficits, which I guess is a good thing for the future generations, but also smaller stimulus, which might make it harder to muddle through winter if coronavirus does increase.
And Phil, just one other thing as we're on the conversation of coronavirus, you had made a really great point at the opening of your piece this morning in terms of what the testing actually looks at when you break down the numbers and read a little bit more into the data.
Yeah, so I guess on that topic, we've got vaccines that are getting pretty close to production. So Pfizer and Moderna have said that they're almost ready, but they've also said, we can't get our hopes up. And the reason for that is just the math. Like we already know that the US has had 9 million cases, but that's only still 3% of the population. And a lot of that happened before the vaccines were ready to be distributed. So even though these vaccines are being tested on thousands and thousands of candidates, the probability that any of the candidates have caught coronavirus is pretty low. So the probability that you can tell the difference between the placebo group and the vaccine group to see whether the vaccine is actually preventing some cases is quite low. The reality is the chance of 200 people in a test of 30,000 having caught coronavirus is pretty much about what you're expecting. So that's not a whole lot of statistical significance. So we're going to have probably some news on vaccines in the next few weeks, but we won't really know how effective. And when we say effective, like how much of the people that get it will be immune from further infections, the vaccines add up to for a while yet.
All right, Phil, next 24 hours are going to be certainly interesting by the time we catch up tomorrow morning. Thanks for joining us on Trade Talks.
Thanks, Jill.
You got it. Thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.